Dear trading community, today I want to show you a video about the CoinM future script in hedging mode. What is hedging mode? With it, you can increase your cryptocurrencies even when the price is falling. And it's really interesting to see how this actually works. As you can see, in 22 days, I've earned almost 19% in the cryptocurrency SUI here. That means I've also put SUI into this here. Of course, you can do this with any coin you like. And I want to explain to you exactly how this works in detail and what you should pay attention to. The community wanted this, so I started exactly this bot once during a live stream. Now I can give you feedback about how it works exactly and how the whole process unfolds in detail. Not only do you earn from the grid bot here when prices fall, because it always goes short with 1x leverage using the cryptocurrencies you put in, but you also earn additionally from the funding fees, as you can see here. Funding fees are charged every 8 hours when you have an open position, and most of the time it's the long positions that pay the short positions. But since we always have a one-time short position open in small grids here, funding fees are incurred that you actually receive yourself. However, and I want to show you this as well, every now and then, like right now, for example, the funding fee for SUI is negative. That means now I paid it once, but overall you can see that 95% of the time, if not even more, there is always a positive funding rate so that I get paid. Very briefly, what are funding fees? It has to do with the index price and the futures price, and that's explained very well too. If the futures price is higher than the index price, then all open long positions have to pay the short positions. But if the index price is higher than the futures price, then the short positions have to pay the long positions. And that's how funding fees are created. You can also find them up here. If I zoom in here now, for example, with SUI, you can see that it currently has a negative funding fee. That means at this moment, I will have to pay every 8 hours, but that changes very quickly. We can take Ethereum as a small example. It has a positive funding rate. This means if I had this bot open on Ethereum right now, I would currently be receiving funding fees. And what's so interesting about that? You don't receive it in US Tether, you receive it in the cryptocurrency itself. Here as well, for example, I received another 0.16 SUI in funding fees. So it's really, really exciting. But there are definitely some things you should watch out for here. Because the hedge short bot, the way I have it open right now, I wouldn't start it if I had US Tether. I'm just being honest with you. Why? Because, and you can see this here as a small example, when I opened it, it was at a price of about $2.02. That's when I bought my SUIs with US Tether. And accordingly, I paid $196, almost $197 for my SUI. But back then, the price was still at $2. Today, the SUI price has dropped by 25%. We now have a price of $1.49. And of course, even though I bought and increased my SUIs, this is actually a disadvantage for me because overall, and we can take a look, you can see that I now have a loss here. What is the current loss? 12.37% overall, even though I said SUI has dropped by 25%. Why do I only have a loss of 12% here? Because I increased my SUIs again here. That means another 18 SUIs added. And so the equivalent value speaks for itself. Here I have listed what my starting price was, what my current investment is, but how many SUIs have I gained up to this point? That means all the SUIs that have now been bought and generated with short positions, if the price rises again, I would gradually make new grid profits here and increase my coins. But there are a few things I still want to show you about how to proceed in the best way. Because personally, I would only start the bot if I already own this particular cryptocurrency and think to myself, if it drops further now, then of course I want to increase my cryptos or this type of coin so that I can sell again when prices rise. But if I want to buy them now with US Tether and then the price drops, then I'm actually at a disadvantage because if the price falls, I could generally buy them cheaper. And instead of having 18% more SUIs here, as I do now, I would have, as I mentioned earlier, about 25% more SUIs at my purchase price, which is of course much more interesting if the price continues to fall. But if you say, okay, you want to let it work for you and you don't really care, you just want to buy now because you would buy anyway. And if the price drops further, it just multiplies, then of course that has an advantage. Because here in this area, you have to select the price range in which the trading bot operates. There is a second option where you say the price range doesn't matter and you actually earn here in a market neutral way only from the funding rates, which you can see here. Maybe just very briefly about the transactions. As you can see now, SUI has just gone up. He has opened a short position here at the price of $1.48 and opened another short position at the price of $1.49. And if the price then falls again to my specified percentage, which I'll show in a moment where it is in the parameters, I want him to close this position again at 0.82% profit with 1 times leverage long. And you can also see this in the past. At 4:26 p.m. he opened a short position at this price, and at 4:46 p.m. he closed it again. And through this short position, I generated 0.005539 SUI again. And this just keeps happening all the time. But you will also see in the past, if I scroll further down, when the price rises too sharply, you'll see that in a moment with various open positions, then it simply didn't sell. That means these short positions here, 1, 2, 3, 4, are currently still in the red. But since they are open short positions, I continuously earn from the funding rate, which is usually positive most of the time. And of course, that's super interesting. And only when the price drops back down to the opening price I showed earlier, let me scroll down again, only then would this short position be closed. So what you see here right now is just a snapshot value. It can go down again, but it can also go up, depending on what happens in the market and how many crits get triggered. Because if SU suddenly shoots up with a massive candle, it will of course open a bunch of short positions. And if those aren't closed again, then these SUIs here will also gradually be lost. Let's continue with the setup so I can show you the two options of this trading pod. If you go to futures at the top and then select futures bot, you have the option here to choose the CoinM futures grid bot on Pionex. By the way, if you're not already on Pionex, I'd really appreciate it if you use the link in the video description, because just for signing up and completing KYC, you'll get a $50 trading bot voucher, and depending on your deposit, you can secure up to $1,000 more. That way you support me, otherwise everything would just go to Pionex. But let's continue now with the setup. What does it look like if I now say, I'm here where I said I wanted to go, from future spot to the CoinM future skrill. Then I go to the hedging section. We're not choosing long, short, or neutral. No, the hedging bot is interesting. And in the next section, you have the option to copy a strategy. There's an AI suggestion, for example. That's the first one I'm showing you now. So not the AI suggestion, but when you select it yourself, up to which price you want to enter. But I'll show you all of this with Ethereum now, because with Ethereum, I have a better idea of where a bottom or a top might be. But you also have a second option, and that's full hedging. Just briefly to explain, what is the difference between segmented hedging and full hedging? Segmented is exactly what I showed you with the individual crits, where a new short is opened again and again, then closed, and then a new short is opened and closed again. That's why you can potentially have a much higher APR per year here. Full hedging means that the amount you use, these coins you take, is split equally between a short position and a spot purchase. Let's assume I use Ethereum for this, then it tells me here if I go to hedging, of course you only have this option with hedging, I would get about 5.35% per year, and now I have Ethereum that I put in at $2,950 and it would look like this. It takes half of the Ethereum I use and opens a short position with it, and the other half is held as a spot position. If the price rises, then you make a profit on the spot position, but the short is at a loss, so it's nothing else. Except that overall, you're neither at a loss nor at a profit because you're market neutral. If the opposite happens and the price goes down, then the short is in profit, but the spot is at a loss. But since both make the same loss and profit, you're market neutral. So how do you make money then? Exactly from what I mentioned earlier, from the funding rates. These are all the funding rates that come into play here. And that is actually the only profit you generate in this case. So it's very market neutral. There's also no price range you can select here. It's truly a market neutral way to achieve a relatively safe. Nothing is ever 100% safe, I want to emphasize that, but a relatively safe, stable performance per year. What would I not do here and what would I actually do? Or rather, where do these two differ? Personally, I wouldn't take the Ethereum I already own and put it into the full hedging strategy. Why not? Because it would immediately allocate half of it into a short position, and that's not what I want. In this case, if I say I want to be market neutral, it would be more interesting for me to say, I buy Ethereum with US Tether at the current time and then put that in. Because no matter what happens here, my entry price was always $2,946 or $2,950 US, regardless of whether the price goes up or down. It always stays the same. Of course, it looks completely different if I already have existing coins, and accordingly, I would only do this with segmented hedging, where I put my existing coins in here. At least that's how I would proceed, and then I can go to customize here. Because if, for example, I now say I want to go down to 2,000 US dollars here, that's where it should short, and upwards, for example, up to 3,500 or even 4,000 US dollars, whatever the case may be, because before that, I don't want to sell my theorems anyway, only if it maybe moves in that price direction. Then I still have the option to adjust the size, or more precisely the number of crits. I enter that here, and now it says I would make between 0.68 and 1.4% profit per crit. Personally, I always use geometric because I always want to have the same spacing. That's now about 0.96%. That means I could probably even enter 90 crits here. Then I have a healthy spacing of 0.74. You know, I've tested this. About 0.8% is the perfect spacing to be most profitable and pay the least fees. If you don't know this yet, check out my channel. I've made a complete tutorial about it. A long-term test showing that 0.7 to 0.8% is the perfect spacing to pocket the profits yourself and not pay an incredible amount of trading fees for opening and closing positions, which then go to the exchange. Then you enter how much you want to invest. I'll use Ethereum as an example now. And you can't use leverage here either, because it now tells you, okay, we have an average sell price if everything is sold and an average buy price if everything is bought, if it goes in like this. Additionally, there's the funding rate APR, which is always calculated over 7 days here. But right now, for example, it's at 5.35%. And then that's basically everything done. You click on create here. I can't do it now because I don't have any Ethereum here at the moment, but that's how it would work. If I assume that the price will continue to fall, but in this case, I would rather increase my existing Ethereum instead of just letting it sit there, then of course I have the option to set up such a hedge grid trading bot. What I want to quickly show now, because if I think, okay, I've generated enough and I've added almost 18 SU is here. In 22 days, that's quite a lot. Earning almost 20% more SUI as cryptocurrency in 22 days is really not insignificant. And when you then click on stop the bot, you can see here that I have the option to choose whether I want everything I've generated to be returned in SUI or if I want everything back in US Tether. And here, of course, you should consider, am I bullish on this cryptocurrency as I just showed here? I mean, back then I bought 97.09 SUI for 196 US dollars. And now I would get back 115.04 SUI, which is already good, because if I had just bought them on the spot market and left them there, I wouldn't have increased them and would also have to wait until the price returns to my entry point. But in this case, it's obviously better if I say I'll take the SUI out while in profit, because what I would get in US Tether here is 172,000. 173.53 at this point in time. But back then, I paid 196 US Tether for it. So of course, if I close the bot, I would be at a loss. Accordingly, it's really only good if you use it to increase your coins and then sell them later. So to sum it up again, if you're interested in this, you might now have a better idea of how a hedge credit trading bot works. You saw it in my example, the further the price drops. The more you do, of course, the more trend profit you make, but you generate all of this in the form of cryptocurrencies if you use cryptocurrencies. That would be segmented hatching, which I find super interesting, to be honest, especially because it's interesting for me when I'm not sure if the price will keep rising, but I think that if we do fall, I'd rather increase my holdings, whether it's my firms or whatever coin I have, so I can sell again at a higher price. Then of course, that's absolutely ideal. If the price is already very low, then this is definitely not the ideal bot to start with. And now, of course, the question is, the entire crypto market has dropped significantly at this time. And whether you should start one now is something you have to decide for yourself. Maybe you'll find a coin that has risen sharply, where you think it could fall further in the future, but also rise again. Of course, it's especially the case with very volatile altcoins or meme coins, where you just don't know if they'll ever recover. Then that's really not very sensible either. You should use something more stable here. You should use cryptocurrencies where you can say, even if we enter a bear market and earn a lot of new coins, you can sell them again in the next run and as profitably as possible. In that case, of course, it's very interesting. But if you say, I really don't care where the price is right now, whether it's at a bear market low, a bull market high, or if it's somewhere in the middle like it is right now, then you can open full hedging and simply buy the coin with US Tether at the current market price and then create the bot. Because what do you actually get here, even though I'm buying US Tether, and when I close everything, I get US Tether back? I continuously receive funding fees, but in the form of the cryptocurrency and not in the form of US Tether. How the neutral strategy works in detail will be covered in a separate video, because Pionex also offers this. You can open a neutral bot where you only earn from the funding fees and you only use US Tether and get US Tether back. But all of that will be covered separately in a dedicated video. If you enjoyed this video, I would of course be absolutely thrilled if you subscribe to my channel. Let's reach the next 1,000 subscribers together. And of course, don't forget to like this video. And maybe let me know in the comments how you like this type of trading bot. Have you already tried it out? Were you successful with it? And what's your feedback? See you next time. Ciao, ciao.